My name is Nolan Matthias, and I'm a stackaholic. And for those of you who don't know me, I'm the guy who made that video on why you shouldn't buy physical gold and silver. And ever since I did, I've been getting a lot of hate mail, especially in the comments section. And listen, if you are dead set on buying physical gold and silver, I'm not going to tell you not to. Hey, do you? It's your money, it's your life. But if you aren't 100% sure if you should be doing it, I'm here to be the voice of reason. Because ever since the US abandoned the gold standard and it became legal to own gold, there's been an incentive for people to make a market. And subsequently, there's now a huge market for gold and silver buyers, albeit it ranges from everything from portfolio balancers to those who are completely misinformed to those who are outright conspiracy theorists. And in the last 10 years, I've become very familiar with the reasons why you should buy silver and gold, and perhaps the reasons why you maybe shouldn't own it. And I'm going to come out right now and say that I do continue to own gold and silver, albeit just not physically. And I'll show you a little bit later on how I do it now. And the way in which I do it is significantly more efficient and significantly more profitable. But in my journey as a reformed stacker, I've come to realize that there's three major issues with the gold and silver industry, specifically the part of the industry that sells physical product. The first is the fallacy that gold is not an investment, it is insurance. The second is the fallacy that the collapse of the US dollar is imminent, which it isn't. And the third is the belief that if the US dollar did collapse, that gold and silver would become the default currencies, which is highly unlikely. But before I get into all the details of why all three of these ideas are so absurd, my name is Nolan Matthias, and if you want to thrive financially, this is the place for you. So do me a favor, hit that subscribe button so more people like you can see this video. It really helps with the YouTube algorithm. So after I made that video on why you shouldn't buy physical gold and silver, I did exactly what I said I was going to do, and I went and I sold all of my physical silver and gold, with the exception of a few pieces, which I'll get to at the end of the video. But upon reflecting on the reasons why I bought the physical silver and gold in the first place, I started to realize that the reasons that I had purchased that physical gold and silver were probably not the best reasons. Now, that was in 2020, and I had started purchasing the physical gold and silver around 2010. Now, obviously, in 2010, we were just coming out of the financial crisis. There was a ton of fear in the markets, and I, like many others, was trying to insulate myself from a future financial crisis. The irony is that I was ignoring the fact that we had just been through a financial crisis, and the dollar had not collapsed. The economy was still the economy, and nobody was running around trading gold and silver for goods and services. And if there was any time when that was going to happen, it would have been during the 2008 global financial crisis. So I was buying physical gold and silver to protect myself from the thing that had just happened that proved that physical gold and silver was not the answer to a financial crisis, a currency collapse, or an economic collapse. Which seems pretty ridiculous, right? And upon further reflection, I realized that there were three major fallacies in the physical gold and silver industry that had become prevalent among stackers, but either weren't necessarily logical or likely to happen. And I'm going to start by saying that this isn't a slam piece on physical gold and silver. It isn't even a slam piece on gold and silver as an investment. But this is very much a direct look at the gold and silver industry and how there are certain fallacies that they use in order to scare people into purchasing physical gold and silver, or in general just misinform the public. And what I find interesting about the gold and silver stacking community is that there's a lot of emotion around this topic. I mean, if somebody goes out and says, I'm going to buy or I'm going to sell Apple stock, nobody really cares. If your buddy says, hey, I'm all in on Starbucks, you might think, oh, that's cool, or that's stupid. And you might take a look at the Starbucks stock, but nobody's going to attack your buy or sell decision on that particular investment. But with physical gold and silver, if you call it a bad investment, it's like you called their spouse ugly. And anytime there's that kind of emotion attached to something, it really puts up red flags for me. And the question is, why is there so much emotion attached to this investment? And the reason why seems to be that people buy physical gold and silver in a lot of cases out of fear that the dollar is going to collapse, out of fear that inflation is going to lower the value of their money, and even in some cases, the fear that there's going to be an apocalyptic scenario where you're going to need physical gold and silver to be able to buy bread, which is absurd. Because if there is an apocalyptic scenario, the person with the bread is probably the person who has the most negotiating power, not the person that has the precious metals. But I digress, because what I really want to talk about here is the fact that there's these fallacies. And the first one I want to address is the fact that people seem to believe that physical gold and silver is not an investment. And I need to be clear with you right now that the definition of an investment is very simple. It is anything you do in order to gain an advantage. And if you're trying to gain an advantage over the dollar losing value, well, you're therefore by definition making an investment. And if anybody can tell me who the person who came up with the line that gold and silver is not an investment is, please let me know in the comment section. I want to find this person, partially because I kind of want to shake them, but also because I want to understand really what they were getting at when they came up with this ridiculous idea. Now, on top of that, there's also another piece to this puzzle where people believe that this is insurance. And I'm going to tell you right now that if owning gold and silver creates peace of mind for you because you have it hidden somewhere and you know that you've got it available to you if you need it, by all means, go ahead and do that. But I'm also going to encourage you not to take every penny that you have and put it into physical gold and silver just in case the worst happens, because it's highly unlikely that something is going to happen in the future where physical gold and silver are going to be your savior. So having a small amount of it just in case, it's just fine. But please don't put all of your money into gold and silver as insurance against something bad happening somewhere down the road. Now, another comment that consistently comes up is that if you don't hold it, you don't own it. And well, I guess yes, in a certain sense, that is true. If you discount the possibility of a complete currency collapse and the need for having gold and silver as a means of making payments in the future, well, physical gold and silver is certainly not the best way to hold gold. It's not efficient, it costs more, and it is not something that you can get in and out of easily. It is not liquid. And I'll tell you exactly what I did in order to continue to have gold and silver in my portfolio. Because a lot of people who watched my previous video would believe that I completely divested myself of physical gold and silver, but that isn't actually what happened. What happened was I got rid of the physical stuff and I started owning gold and silver in ETFs that were physical gold trusts. So while I sold my physical gold and silver, I've still been participating in the upside associated with gold and silver, and I've also been able to dollar cost average over the last couple of years, which means my returns are significantly higher because I was able to purchase at any time there was a dip in the market and add to my portfolio at lower costs. And I simply would not have been able to do that had I been buying physical property because of the friction associated with getting in the car, driving to the gold dealer, negotiating, haggling, and making sure that I bought exactly the right product. Oh, and on top of that, I haven't had to pay any of the premiums associated with physical gold and silver that many of you have paid and many of you have become very familiar with over the last couple of years as volatility in the market has led to more popularity in the physical product. So what I do is I use a product called Passive, which ties to my investment account, and I'll put a link to Passive in the description below, and I have a target percentage for gold and silver, and when gold prices go up substantially, Passive automatically tells my portfolio to stop buying, and when prices go down and the percentage dips below my target, Passive tells my portfolio to automatically start buying more. So I'm always buying when the price of gold is low relative to my overall value of my portfolio, and I'm not buying when prices are high relative to other investments. And I get that added benefit of when there's cash available in my portfolio, it's instantly allocated. And if I need more gold, it's done instantly and for free with no premiums. In fact, the investment house that I use doesn't even charge me a trading fee in order to purchase the ETFs I'm purchasing. And when gold prices go through the roof because of high volatility, I'm just simply not buying any because the price is too high. Now that leads me to the second fallacy that I consistently see being used to encourage people to buy physical gold and silver. And that's the idea that the collapse of the US dollar is imminent. And this is just simply not the case. Because you have to keep in mind that the US dollar is the global standard. It is the global reserve currency. And that means from a global perspective, everybody is vested in making sure that that currency remains stable. And while there's talk of the BRIC nations coming up with their own currency or the yuan taking over for the US dollar, that doesn't mean that there's an imminent collapse of the US dollar. Because every single time that there's been a change in the global reserve currency, whether that was from the Dutch guilder to the British pound or the British pound to the American dollar, the previous reserve currency continued to hold its value. And the reason for this is quite simple. It's because in that transition period, especially as you are transitioning to a new global reserve currency, there's always going to be as much hesitation about that new currency as there was about the old currency. And therefore, a significant amount of support remains for those previous currencies. And to this day, the British pound is still one of the most secure currencies in the world. And the Dutch guilder, which was adopted in the 14th century, remained a global currency until 2002, long after it was the world reserve currency, when it was replaced by the euro. So major currencies just don't collapse. Now, is it possible that it could happen? Yes, absolutely. In theory, anything could happen, but it's highly unlikely. In fact, it's highly unlikely that any first world currency is going to collapse anytime soon. So then the next question becomes, well, let's say it did collapse, or let's say the dollar became unavailable, or let's say there was some sort of apocalypse that made normal currency something that just wasn't traded. Well, then the question becomes, is physical gold and silver real money? And the answer to that question is probably not. Now, many gold and silver gurus would have you believe that when a currency collapses or an economy collapses, that gold and silver becomes the go-to. And they'll point to places like Turkey and Venezuela and assert that gold and silver became the way that people were paying for things. And while this happened in some cases, most specifically in Venezuela, in small mining areas where gold and silver were prevalent, the reality is that most of the time, a different currency quickly replaces the currency that has collapsed. So in the case of Venezuela, depending where you were in the country, people started using the American dollar, the Brazilian dollar, and several other regional currencies. But rarely did they turn to physical gold and silver, especially in the major metropolitan areas. Now, there's also the argument that paper money has zero inherent value. However, the value of paper money comes from the social agreement that it has value and is worth something. It is agreed upon this piece of paper is worth X and therefore tradable for goods that are deemed to be equal in value. And the assertion that physical gold and silver are real money and therefore have inherent value is false. Because in the same way that paper money needs to be agreed upon by a society that it has value, the same societal agreements would have to be made about physical gold and silver. And I'm not sure if you've tried this recently, but if you walk into a grocery store or a car dealership or pretty much anywhere else with a piece of physical gold or silver, the chances that the person on the other side of the transaction are not only going to agree with you that this holds a certain amount of value, but is also tradable for whatever you're trying to purchase is slim to none. And the belief that physical gold and silver would replace a currency relies on the assumption that everybody is going to agree that that physical gold and silver is worthy of trade. And when you think about the availability of something like physical gold, there's simply just not enough to go around in order for it to be viable as an actual currency. That's why every country in the world, including the US, which was the last one to do it in 1973, have abandoned the gold standard. Its viability as a currency just is non-existent. Now, on top of all that, when currencies collapse, the things that become most valuable are the things that are needed and demanded most. Things like bread, things like toilet paper during the pandemic. And it's going to be the people that can supply the things that are needed and wanted that are going to have the most wealth. And that wealth would likely be measured in the things that they're able to obtain, things like land and real estate and goods and services, not in things like precious metals. Because we live now in a modern society. This isn't medieval times. Our economies are far too sophisticated to think for a second that there wouldn't be a fast and significantly more efficient solution to a currency collapse than going back to something that has long since been left in the past. I mean, that's like saying that the solution to global warming is going back to the horse and chariot. Now, there's one comment of all the thousands of comments I've received about gold and silver that really stood out to me, and it is a recent one. And if you need any more evidence that gold and silver is not going to be the standard for currency going forward if the worst were to happen, well, think about this. In all of science fiction, in all of the apocalyptic movies where Hollywood, the best storytellers in the world, have created scenarios around the ideas of the absolute worst of the worst happening, have you ever seen in one of those movies gold and silver being used as the currency going forward? And my point here is simple. If the best storytellers in the world don't think that physical gold and silver is believable as a replacement currency, then why are we believing the storytellers that are trying to make the market to encourage us to buy something that we probably don't need? Oh, and one last thing. Yes, I did sell all my physical gold and silver, but I did keep these two as a reminder. Now, some of you will remember in my first video that I talked about the fact that one bar was worth less than the other. When I went to sell my silver bullion, they offered me one price for my Sunshine Mint bars and another price for this NTR bar. And this NTR bar was deemed to be worth less than my Sunshine Mint bar. And a lot of people asked why. Well, from what I can tell based on all the research I've done since, is this bar was worth less simply because on that day, that gold and silver dealer simply wasn't interested in it. And if you haven't already seen that video, I'll link to it right here. And if you have seen that video, make sure you check out this video up here.